Hi guys, welcome back to high yield intraday trading. Alright, so the topic that I am gonna discuss here today may be that many of you guys will not agree with me, but please be informed that this is something that relates to my thoughts and my style of trading. Okay, now this is something that I have been following for years and have been successful with it. Many of the times it is very important to unfollow the standards that has been set by someone and follow the ones that really works for you. I mean, day trading is all about what works best for you. Okay, and if you are superable in finding it, there is no looking back. Yeah, so the topic for today is stop loss, a very important part of day trading, or for any style of trading to that matter of fact. Okay, as we all know, we place a stop loss price that will make sure that if the stock direction goes against us, then we should not be losing more than the stop loss value. So basically we define a point beyond which we do not want to lose any money further. Okay, now the question is, where do we exactly put the stop loss in intraday? Is it that important to always put a tight stop loss in intraday? Is the risk reward ratio so important in intraday? How about just to concentrate on our profits? Does not matter how much, but just profits, rather than concentrating more on the risk reward ratio. Will it not be a good idea to give the market some time to prove that you are right by setting a decent stop loss? Okay, now these are some of the questions that I have in my mind. Okay, now many people have multiple things that they take into consideration while putting a stop loss. Some have it at the day's swing high or at the day's swing low. Some have it at the recent swing high and at the recent swing low. Some even put it at the support and resistance levels, etc, etc. I mean, all are right in their own approaches, but here in this video I will put forward the way I use the stop loss. So basically, or most importantly, we should be concerned about our entry, because I put my stop loss depending on my entry, and my stop loss is always near to the support or resistance levels. This actually takes care of two things. First is, if you are going long at a support level, then there are more chances of the stock going up rather than hitting the stop loss. So in this case, we can have the stop loss just below the support point. Now the support can be a pivot level, might be a moving average level, even a super trend line, the Fibonacci, anything that you use to confirm your trades. Okay, so that's the first thing. The second thing is, it takes care of the thing that the stop loss is not too wide, so that if the stop loss gets hit by any chance, the loss can be minimum. Okay, also note that sometimes it becomes very important to stay back in a trade even if the stop loss is a bit wider, or if the stop loss is a bit bigger. Now in this case, you blindly cannot stay back in the trade. You only stay back in such trades with higher stop losses only when the technicals support it. Okay, now technicals like volume or even super trend. Okay, if we see that the volume is more and the super trend is supporting it, we should not mind holding up to the trade and giving the market some time to move in our expected direction. So basically, we should be flexible enough with the stop loss and not have any specific standards for placing the stop losses. Okay, and you can be flexible with the stop loss only and only if you are super strong in your technical analysis. Okay, that actually gives you the edge, the confidence, the dare to take that risk. Yeah, and it is also very important to keep control on your mind, guys, because most of the time what happens is we panic and come out of the trade even before the stop loss hits, and after some time we realize that the move sustained in our expected direction. Okay, now one more very important thing to keep in consideration when you are trading with higher stop losses is that your position sizing should be P perfect. Okay, if you are not following the right position sizing rule, then it's very obvious that you will panic, and I hope you remember the rule for the position sizing. If you don't remember, let me just repeat it real quick. So position size is nothing but the number of shares that you buy or sell. Okay, so position size should be equal to the risk that you can take in terms of rupees divided by the stop loss. Okay, so if the risk that you are ready to take is 1000 rupees and if the stop loss is 2 rupees, then the max number of shares you should be buying or selling is 500, not more than that. Okay, so you cannot take a huge position having a huge stop loss, and unfortunately if the stop loss gets hit, then your losses will surely be huge, and then you should not repent that you lost a huge amount just because you did not follow the very basics, and that is position sizing. Okay, now having that said, let me take you to the charts and show you what exactly do I mean, so that it will become more clearer. All right, so this is the graph for Coal India, guys. That is for Monday, 4th of September. Okay, so the day opened, this is the long green candle which opened the day, and it actually sustained R3, the resistance 3. Okay, came down a bit. Okay, took support here and again went up. Okay, now in our example, what I'm going to show you here is, let's say there is a guy who enters here. He goes long at this position. Okay, now why does he go long? One of the very common reason might be because the day's high was breached here, right? So this is the day's high. Okay, since the candle or the stock price broke the day's high, we can very well expect that this stock can go up further. Okay, so let's say by seeing that somebody went long here. Okay, and then we got a red candle here, again a green candle. So right now also the guy who has gone long is either at cost to cost or is in a small loss. Okay, now see here what happens in this red candle. Okay, we get a big red candle again, and continuously we get 5 red candles. So in this case, what will most of the guys do? They will come out of the trade. Okay, now let's say what is the position, what is the price at which you went long. Let's say this is the line, so 245. Let's say we went long at 245. Okay, and the stock is coming down continuously. You get 3 to 4 red candles and you are slowly losing your confidence. Okay, now if your technicals are strong, if I would have been here, okay, I will place my stop loss just below the R3, maybe around 40 to 50 paisa below R3. Okay, now what happens here? The point at which we went long is 245, and the place where I want to put the stop loss is 242. Okay, does that worth the risk? I would say yes, it would worth the risk, because the stop loss that I am putting is a 3 rupees stop loss. Okay, and at the same time I see that this is the R3 which can work as a support. Okay, so which can act as a support. Okay, now remember guys, the R3 line that I'm showing here, in real it has worked as a support in this case, but there are many other technicals which will work as a support in this case. Okay, now I am not in a situation to explain each of the support lines, each of the things that can work as a support here. Okay, so those are the things which I normally cover in my technical trainings, and they are very much strong enough to let you know that this guy is going to take support here and move back again. Okay, so right, in this case I am taking R3 as an example. Okay, so 242 is our stop loss. Does it hit the stop loss? In this case it is not hitting the stop loss. Okay, rather it is taking a support here, and again it moved up. Okay, it very well crossed 245, which was our entry, and it even crossed 247. Okay, now if you apply a Fibonacci extension and a Fibonacci retracement, Okay, have these two things applied onto this chart, guys, and see why I am saying this and why I am emphasizing that taking a risk of 3 rupees in this trade will not hurt me because my technicals are strong. Okay, this is the exact thing which was done today. Okay, which was done today in the trading session, and we were successful. Okay, we got a profit of nice 1 rupee 70 or 80 paisa or even 2 rupees. Okay, so this is a perfect example. Okay, don't panic. Okay, don't panic when stock prices are coming down. Rather, calculate how much risk you can take. Okay, and that risk calculation should be based on your technical analysis. If your technical analysis is strong enough, you can be rest assured that you will be in profit. Okay, this is one example, guys. Okay, now let's take another example. Torrent Power was another such example wherein we traded it. Okay, so this is Torrent Power, guys, today. Okay, so let's say, for example, somebody sees that let me show you the pivot points here. Okay, so yeah, so let's say somebody has been marking here. Somebody has have an eye on Torrent Power, and he saw that the support 2, the S2, was sustained by the stock price, and it went up. Okay, so it touched S1. Okay, this is a green candle which sustained S1 actually. Okay, so it sustained S1, and that guy actually thought that since it has sustained S1, it should go up further. So what he did was he entered long at 210. Okay, the stock price is 210 here. Okay, so he entered and he went long. Okay, now the market remained, or the stock remained flat for another maybe 1 2 3 4 5 6 7 8 9, maybe another for 1 hour. Okay, so after he entered long, the market was in a sideway move for another 1 hour. Okay, now at this point, obviously that guy will start losing his confidence on his trade, right? Because it is sideways here, and here we have started getting some red candles, right? So what will happen if you place your stop loss at 209 at this point? Okay, to the matter of fact, let's say even if we put a stop loss at 208.50, which is the S2 line, is it a big deal to do that? Is it a big deal to take a risk of 1 rupees or 1 rupees 50 paisa for a 210 rupees stock? We can do that, right? We can surely do that. Rather than having a really tight stop loss here, okay, we can give the flexibility, or have the flexibility to have the stop loss for another 1 or 1 rupees 50 paisa. Right now, if you have the stop loss of 1 rupees or 1 rupees 50 paisa, you can see the movement what happened here. Okay, it did try to come down. Okay, no doubts about it, but it was not able to sustain it. Okay, now since we have the stop loss below 1 rupees or below 1 rupees 50 paisa, we can be, and if our position sizing is correct, then we don't have to bother about anything. Okay, because we know that if I lose money, I will lose this much, which I will be able to manage. It will not be a big deal for me. Okay, and if it goes up, I will be in profit, right? So that is the importance of being flexible with stop losses, and that is the importance of having the right position sizing. Okay, so you wait here, and we get a green candle again which sustains S1. Okay, and then you see the move. Okay, you see the move right from 210 to 219 or 218. Okay, it's a big move, right? So this is the exact thing which I wanted to show you people, because this is the exact thing which I do in each and every of my trade. Okay, keep the position sizing correct and have some flexibility with your stop losses. Okay, so having that shown to you guys, I believe you all have understood what I wanted to replicate here. Okay, in day trading, your only concern and concentration should be catching the right moves at the right time and locking your profits. That's it. Please do not get stuck with the risk reward things, waiting for the stock price to reach the risk reward ratio and finally seeing your profits getting converted into losses. Risk reward is fine, okay, sometimes, but not always in day trading. Okay, have it done, guys, and be satisfied in calling yourself as a profitable trader. Okay, so that's all for now, guys. As always, please do like, subscribe to my YouTube channel, and also join in my Discord channel. We can have a lot more talks over there. Thanks so much. And yeah, guys, just want to take 30 seconds of yours to remind you about our training program commencing on 16th of September 2017, and we are getting tremendous response for the seat or slot reservations, so we request you to book your slots at the earliest, as it is a first come first serve basis. Please visit www.HYIELTTradings.com/trainings to get the details about the training program. We have mentioned everything there, and we would also request you to visit www.HYIELTTradings.com/testimonials, where we have posted the feedbacks that we have been provided by the trainees who are in the present batch. Make sure to click on the view details button on each of the feedbacks. That will show you the original email from the respective trainees. We just want to prove that we are genuine, and we really look forward for your learnings to make you an independent trader. That's the whole reason why we are showing you the real emails. Thanks much.